which parts of the market that gonna hurt most, like commodity, equity?
Commodities have been hurt in recent days based on the potential for tariffs against soybeans, which has hurt the grain market. So I think material stocks potentially in the short run could be impacted. But the dollar recently has been pretty stable. We need the dollar to start to lead lower, and that would be actually very helpful for commodities. Commodities have been hurt in the month of March in general, I think the trend for commodities has been positive over the last year. It's been a slow rise, and we've seen the move in the base metals and in oil, and now oil's starting to pull back, and precious metals are starting to do much better based on this uncertainty.
And also I talked with some economists and I see some surveys and reports of the economists, and they take it as given that China will achieve the global economic supremacy in the long run, no matter what happens now. So what's your view on that?
Look, I think it's a global marketplace and there's give and take, and it's difficult to know. It's very difficult for me to comment in a yes or no fashion on a question like that. I think we both benefit from trading with one another and helping each other's economies.
Now let's back to we talk about commodity market. What's your observation in the commodity market in recent sessions, and what's your prediction on the trend of the commodity in the near term?
The near-term trend of commodities has been down since the beginning of March. I think in the next few days that likely continues. I see the potential for crude oil potentially to top out and start to trade lower, really in June, July into the fall, and a lot of that's based on supply and or lack of demand, whereas I think gold and precious metals are going to be quite strong, and that should be led by the US dollar falling. So I think that in general, falling dollar is bullish for commodities, and I think we'll see what happens in terms of China's response and whether this in fact can lead to them reducing their exposure to treasuries. If there's one thing, and this is a different topic, but just while it's on my mind, that it's whenever China in general experiences, they don't want to let their currency rise too dramatically, so they have to really continue to buy treasuries because it helps their economy and to stabilize the currency. And so that's going to be an important point to make, and that it'd be very difficult for them to consider reducing their exposure to treasuries and or going to Brazil to buy soybeans. I think the two countries are still very much related, and so a lot of this is tough talk back from China, and the two really should.
Yeah, the possible best way is international cooperation, especially in this current situation right now. And also we were talking about the gold prices and the crude oil market, as we mentioned, for a long time. And you think the gold is set to break out? Because I do think that for the gold market, it kind of in a good shape. Because the stock market volatility is kind of one of the major catalysts for us have been waiting for in order to see the good prices to break out to increases beyond the current trading range. So what kind of the trading range are you looking for?
Well, 1365 on the upside is very important for gold, and that's really held over the last few years. Recently, we've been seeing some strengthening in the last few months, and I think that gold is basing and is ready to begin to break out. We do need the dollar to start to turn down a little more sharply for that to happen, which would help all commodities, and really for signs of weakening U.S. growth potentially would actually be beneficial for gold, seeing that the Fed is not going to tighten as quickly.
Yeah, the Fed is also the factor too.
When you see periods where treasury yields and the dollar both fall in unison, those times tend to be very bullish for precious metals. And so we've seen recently treasury yields start to pull back a little bit. We got to 293, we pulled back to the mid 270s, and so some of that's been a flight to quality where stock market volatility has increased and people have gone into treasuries, and also the uncertainty about potential trade protectionist type policies and what would happen. So that's all very bullish for gold. So I advocate being long gold, and I think you would add to exposure above 1365, which could cause a move up to 1550.
That's great comments. And for also the retaliation from China is concerning the energy market, especially for the crude oil prices is under pressure in this quarter. So do you think the crude oil market is in a good shape, and or there's something else parts that we need to pay more attention to or to worry about, like the Russia side, the supplies from the U.S. or the OPEC issues? What do you think?
Yeah, the Middle East production, in my mind, is really the single largest factor for crude oil and supply. I think, in general, crude enjoys a nice seasonal bounce during this time of year, and we've seen some of that, and now we're starting to weaken in recent weeks. I think we're really at a make or break for crude where it really needs to hold at current levels, and the upper 60s should be a level that's pretty strong resistance, as they say in technical analysis, which should really hold rallies over the next month. And then I think that crude likely is going to start to turn lower. I don't think the demand is there, and the supply has been a factor and has been very high, for some time. So the sentiment also has been very, very bullish for crude oil. It's important to mention. You look at CFTC data with futures trading, and a lot of the speculators are very, very long crude. And so historically, that means that upside is likely limited for crude.
So there's some analysis on the street that's looking for the crude oil prices to touch and reach 70 plus in this quarter. So, but you take the other view. You think that the upper side room is limited.
66 was the recent high. If it gets above 66, then it likely could get up to 70. It's tough for me to think that it needs to go down. It's already had about a 4 to 5 point decline in recent weeks. So we're really at an area where crude will really need to hold. And so technically the uptrends are intact for crude, but I can't make the prognostication that crude needs to go to 80 or higher. I'm a little bit more skeptical, so I would really use strength to sell into crude over the next few weeks if we get that strength.